Welcome back. JPMorgan has surged more than 10% over the past month and is the only big bank stock to hit a new record high this year. But Buckingham Research now is stepping to the sidelines. They downgrade JPMorgan to neutral. They say that all the good fundamental news is priced in. All right. John and Pete Najarian. I mean, when you take on JPMorgan, everybody.
But this is a guy who's been right in JPMorgan because he had a buy on it. He's got his price target of 122.
Now he says it's fairly priced.
Right.
Fairly valued.
Yep.
Is he right?
It makes some sense. I don't know if he's right necessarily on that, but I understand.
What do you mean? Why not?
I understand
the guy's been right.
I would understand. Well, and if he continues to be right, then being neutral makes a lot of sense. And maybe there are other financials that are actually going to catch up, because when you look at JPMorgan and where it trades, he also talks about valuation. He feels it's fairly valued. That's why he's going to this neutral rating. So other names out there that we talk about all the time that have had some performance this year, but have lagged certainly at JPMorgan. But you look at like Bank of America and Citi and U.S. Bank and Wells Fargo. Those are all four names that I'm in, have been in some of them for a very, very long time. U.S. Bank's been a multi-year hold for me. I love them, a Minnesota company. They do nothing but kill it every single day. Look at our stadium out there in Minnesota. Let me tell you, there are a lot of different banks out there right now that somebody could be invested in. And JPMorgan, as great as it is, maybe the others have a little bit more runway.
Joe, you own it.
I do. I own U.S. Bank.
Is it time to sell it?
No. U.S. What did you say? No, I'm not. U.S. Bank, that's 100% revenue exposure. No, I'm not. JPMorgan, okay, when you're screening all the financial institutions, I think the most critical thing right now is the spend on technology and the ability to leverage whatever they're executing on technology to make the experience better for the consumer. Right now, banking is about the consumer. What are you delivering to the consumer? Are you delivering it domestically? Are you delivering it globally? There is no one in the large cap banking space that can compete with what JPMorgan's doing in technology. That's why you stay with it. That's why I'm long. That's why I disagree with the call.
All right. So, but you could make that kind of an argument for any stock that's done well, that you like the fundamentals, then valuation be damned. It never matters.
The valuation of JPMorgan is right, but you're not looking when you're talking about a PE for JPMorgan that's spiraling out of control relative to some of the other names. This is still, because the financial sector is so underloved, this is still a name that screens
the
relatively
highest PE
cheap.
of the group.
Right. They got a great yield.
But that premium that you're paying it for a reason. I just don't see philosophically, again, when I'm identifying technology as a catalyst for the industry, where am I going to go with that money? I've been in Citi. I caught the run there. Where do I go now?
What you're paying for in JPMorgan is management. You're paying a premium because they have a very strong balance sheet. They have a very strong management team. They have a dividend that's growing.
I get it. But when the stock's at $100, you say you're paying a premium for Jamie Dimon. When the stock's at 118, I'm paying a premium for Jamie Dimon. If the stock's 150, is it still a premium?
Well, it depends. It's 11.5 times earnings. The market's at 17 times earnings. So you're buying it at a discount to the market with faster growth in the market, better than its peers in terms of balance sheets. And if you do get hiccups, this is the company you want to own. So I wouldn't sell it at this. In fact, I look, if it starts coming down, add it more to portfolios because you're buying high quality. Not to say you can't buy Bank of America and U.S. Bancorp, because we do own those. You do want a satellite around it, but I think it's a core holding. JPMorgan today is something you want to hold in your account.
And I think he was clear. I think he was clear in the piece also, is he said for long-term investors, stick with the name. But if you look at the chart technically, it has broken out. It had resistance around 115, 116, and it's broken out of that nicely. And so I think if you see some consolidation here, and that can happen over a couple of quarters, then it consolidates and has a chance to move higher. But I think long-term, if you're going to own the banks and the banks continue to or start to rally again, JPMorgan's going to lead that charge.
Doc, I have my notes here. It's got Joe, American Express, JPMorgan. Pete's got a whole bunch of names. Bryn, Surratt. Look at that big area right there.
That's right, that big blank.
Doc.
Zero. Nothing. No
There's like literally nothing there.
Nothing.
You don't own any banks?
I'm not a big fan. I'm a fan of Jamie.
You use email?
I do.
I know you like Jamie.
Yeah, I like Jamie, but I find better places to put my money to work. And one of them, quite frankly, is Square. Stock we'll talk about later in the program. I still love Square. I think they're making a lot of the right moves right now, and I think they're going to be a force to be reckoned with. So as far as growth, I see a much bigger, much longer runway there than at any of these big banks.